You posted a photo of yourself in Instagram, and that photo could now get you an income tax notice in 2026. And the next time that you withdraw cash from any ATM using your UPI, your bank may already be charging you hefty amount of fees on top of it, and you may never realize it. So in April 2026, six rule has changed in the India government payment rules, and I will tell you all of them, so please be tuned to this video. So we have six different factors that we will be talking about today, that is UPI and ATM withdrawals, cash and PAN card limits, income tax and social media, as well as zero balance accounts and the FNO trading cost. All this has changed in 2026, and the last is digital fraud compensation. So each one of them, what has actually changed in 2026 April, and what are the exact numbers and what you need to know, I will go through each of them in this video. So starting with the UPI cash withdrawals, most of the people are nowadays using UPI to withdraw cash from the ATMs, and they think that is being cut from the limit of your card, but it is not anymore. So HDFC Bank has already implemented this change, and the major banks will now follow. So the UPI based cash withdrawals now count towards your monthly free ATM withdrawal limits, and no exceptions would be given on the same. And here it what means in actual numbers. In metro cities like Mumbai, Chennai, Kolkata, you get 3 free cash withdrawals per month, and in non-metro cities you get 5. So previously, if you use 3 card withdrawals and then switch to UPI, those UPI withdrawals were free. But now 3 card withdrawals and 2 UPI withdrawals equals 5 total, and the UPI ones are into the same limit with the card withdrawals. So every withdrawal above that limit has a fee of 23 rupees plus GST, that is approximately 25 to 27 rupees per transaction. That is not a lot per transaction, but extra 4 withdrawals in a month, that would be 100 rupees, and 12 months if we add up, that is like 1200 rupees, and that is being deducted just for simply accessing your own money. So what you should do is plan your monthly cash withdrawals in advance and treat the UPI and the card withdrawals are the same pool. And please do not assume that UPI is free at ATMs anymore, because most of the banks has already started implementing it. Now the rule number 2 is cash transactions and PAN card limits. The cash transactions in India has right now a tighter requirement than ever before, and the limits are lower than most of the people actually think. So here are the thresholds. So if you have 10 lakh rupees in your bank account, the bank will auto report to the Department of Income Tax if you deposit or withdraw more than 10 lakh rupees in cash cumulatively in one financial year. Your bank automatically reports it to the Income Tax Department. This is not part transaction that I'm talking about. This is a cumulative across the whole year or the whole financial year. So 1 lakh rupees per month in cash. So month 10 you would be hitting 10 lakh rupees. So you need to plan it accordingly. Now the credit card bills that is paid in cash above 1 lakh is also getting flagged. If you pay your credit card outstanding in cash and the amount is above 1 lakh rupees, the transaction gets reported directly. The property transactions with cash above 2 lakh rupees has a 100% penalty rate. So under section 269 ST, if you accept or pay more than 2 lakh rupees in cash for a single property transaction, the penalty is over 100% of that amount. So if we understand it correctly, if we accept 3 lakh rupees in cash for a property deal, there would be a 3 lakh rupees penalty as well. The same amount will be gone. The digital transfers above 10 lakh rupees in a single day are also getting reported to Income Tax Department. So NEFT, RTGS or any digital transfer that is above 10 lakh rupees in a particular single day is getting reported to the Income Tax Department, and you need to be having your documentation ready for any transfer at this level. And if you go to any bank and do an FD of 10 lakh rupees, that is also getting flagged with income tax department. So if you are depositing more than 10 lakh, that would get flagged. So you need to be very careful on what amount that you would be depositing to your bank. So these are the changes that they have introduced for this rule number 2, that is cash transactions and PAN card limits. Now the rule number 3, the income tax now can gain access to your social media accounts. So under the Income Tax Act 2026, tax authorities now have the legal authority to access any of your social media to get any digital footprints for any transactions. So that also includes your social media activities as well. So let me be direct about it, what it actually means. So this does not mean that they would be scrolling your Instagram right now. What it means is that if you have declared your income as 10 lakh rupees and you are flaunting your 1 crore car in Instagram, that would immediately get flagged and you would have to have some kind of answer on top of it. So please be ready with the same. The income tax department will now cross verify with your bank data and your social media accounts, and if the expenses does not reflect in your bank account or your ITR, a notice can come to your doorstep. You need to be ready to answer the same as well. Your digital footprints now also exceeds beyond your public posts. Your email now connects to the cloud network that we are using nowadays, and the photos that we click has metadata that is part of it. So banking platforms can also leave those digital trails that can be tracked by the income tax department. So for honest individuals whose lifestyle matches with their income, there would be nothing to worry about. But if there is a gap between what you declare and what you actually visibly spend, that gap is now more visible than has been ever before. So what you need to do is keep large purchases and expenses traceable through your bank account or your card, and maintain invoices that you have purchased for XYZ items, and simply make sure that you have a visible lifestyle that is consistent with your declared income. So the rule number 4 is zero balance account holders would now get more rights. So one of the good rules that has been introduced in 2026 is from 1st of April 2026, RBI has significantly strengthened the rights of the basic savings bank account, that is your zero balance account. And here is what you are entitled for at no charge. So unlimited cash deposits can be done. So there would be no limits on how many times you can deposit to your bank. A debit card with a zero annual maintenance charge should be there with your basic savings account, and a checkbook with free certain annual limits would also be given to you, and the digital payments like NEFT, UPI, RTGS would have no hidden charges as well. And also a minimum of 4 free ATM withdrawals would be given per month. So previously what was being happening in banks are, when you go to a bank and you tell them that you want to open a basic savings account, they would restrict these services that I've just talked about in your bank account. So this would be changed from April 2026. Now the rule number 5, that is with the FNO trading, that got more expensive. So if you trade future and options, your cost per trade has been increased from April 2026. The government has hiked the security transactions tax on FNO, and the future STT is now up from 0.02% to 0.05%. So if you have a 10 lakh rupees future contract and the STT was 200 rupees, now it is 500 rupees. So there is a 150% jump on the same. Now the options STT is up from 0.1% to 0.15% on premium. So what that actually means is 10,000 rupees premium contract where the STT was 10 rupees would now cost you 15 rupees. That is a 50% increase. The long-term equity investors would have no change with this change that has been introduced by the government of India, and the equity delivery still remains at 0.1% and the intraday cash is at 0.025%, and both has been unchanged. So if you are an active FNO trader, your break-even per trade has been shifted now, and the factor of the higher STT has been into your position sizing that you need to be strategizing on. So if you invest in equity for long term, you can carry on with the same. There is no change on the same. Now the rule number 6, that is the RBI digital fraud compensation plus the loan recovery limits. So two final changes that I would be talking about in this video that would both work in your favor. So the digital fraud compensation from 1st of July 2026. If you are a victim of digital fraud, RBI has now a compensation plan or a compensation framework that would compensate you in such a case. The fraud amount up to 50,000 rupees, you can receive up to 85% compensation on the same. So the maximum payout has been now capped to 25,000 rupees. So there are three conditions on top of which you would get this compensation on. So report it to your bank within 5 days of the fraud happening, and please do not wait for the same. And the 5-day window is very crucial for you to understand, because if you do not report it within 5 days, it is null and void. And the number 2 point is file a complaint at the cyber security or directly through your bank's portal or branch. And the number 3 is this compensation can only be claimed once in a lifetime. So RBI is giving you a safety net, but the message is clear, that is you need to report it fast. But after this, you need to be significantly more careful about your transactions. And the last rule of this video is the loan recovery agent rule that has been stricter for 2026. That is, loan recovery agents from banks and NBFCs can now only contact you between 8 a.m. to 7 p.m. and no calls would be entertained after 7 p.m. So no calls would be done from these agents after 7 p.m. and also nobody can come to your doorsteps after 7 p.m. Also, they cannot contact any of your family members or colleagues to discuss your loan details, and your financial situation is only private to yourself and the bank. So previously, all this physical and the mental harassment that was being done by the loan recovery agents will now be finished, because with these heavy changes that has been introduced by RBI, the penalties would be very huge if they do the same. So any recovery license that has been given to this agent should also get suspended if they do not comply with these rules. So 3 things that you need to take away from this video is: number 1, monitor your UPI and ATM withdraw together, and they are the same limit now for most of the banks. So number 2 is keep all the records and invoices for every single high value transaction, be it digital or cash. No exceptions would be given for the same. And number 3 is, if you experience any online fraud, please report it within 5 days at 1930, and please do not wait. So comment below which are the best rules that has been introduced by RBI and the income tax department in 2026, and how they will actually help you in your longer run. Thank you so much. This is Sarnav this side from Blackstone Finance, and I'll see you in the next one.